And joining us now, Roger Ferguson. I want to take it in a completely different direction, I think, Roger, and just try to figure out whether the quarter point is likely to, in hindsight, to look like the right move, whether there's subsequent quarter point cuts, or whether we're headed higher. And the whole idea of trying to handicap it, we got to figure out how President-elect Trump's, a lot of his proposals, how does it fit into monetary policy? And some would seem to be inflationary, some seem to be recessionary, or a combination of both. So I could see us having to raise rates because maybe inflation gets rekindled from tariffs, but I could see us maybe continuing to lower rates if Elon Musk comes in and puts the brakes on a lot of government and government spending. Is it a hard time to handicap things, Roger?
Yeah, I think it is, actually, and I think Chairman Powell handled it very well. He said effectively it is a wait and see. We have to see exactly what the policies are. And then he said that what they would do is what you'd expect them to do, which is to put it into their model, which is the best of the U.S. economy, and then make decisions. But I think he certainly is open to the possibility that that modeling, once we know what the policies are and what that mixture is, could lead to either thing. I think it's too early to say one or the other, but I think you're right. It is going to be important to see exactly what the policy mix is, and then, as he says, they don't guess, they don't speculate, but they will decide once they have a better sense of the policy mix.
Well, in kind of a perverse way, Roger, the jumbo cut of 50 basis points caused conditions to tighten. Mortgage rates have gone back up. The 10-year has done nothing but go up in yield since then. So it almost was, what they were trying to orchestrate, almost the reverse happened, yet the market continues to hit new highs and the wealth effect is on full display. So should we change what the neutral rate is right now, given what's happened with the 10-year?
Look, I think the question what the neutral rate is very much going to come into play. As you know, I thought the first move should have been 25 basis points. It was interesting that Chair Powell pushed back pretty hard on the thought that the shape of the yield curve and the level at the 10 and the 30-year was suggesting a loss of confidence around the inflation fighting question and a rise in inflation expectations. But what he also said that I found really interesting is a certain kind of caution about exactly the pace at which they are going to continue to cut rates. And he was clear that they're moving away from sentences that he perceived to be giving forward guidance. So I think to your point, Joe, while he's pushing back on the thought that there's perversity in the markets and that inflation expectations are becoming maybe a little loosened, I certainly heard in his voice a sense that we will take this one meeting at a time. And I think he said very explicitly they're not on automatic pilot, or a phrase to that effect.
It was only one day, Roger, and I don't know how much you can read into the reaction to the election results, but gold was, after trading at a series of new highs, gold was down significantly, which seemed odd if it's going to be inflationary. There are those watchers that say a highly deregulatory environment could be disinflationary or even deflationary, and maybe either at least counter some of the tariffs if they are put on. Maybe there won't even be some of them. Maybe it's negotiating. But are you convinced that we are going to see highly inflationary policies? I mean, we've talked about Elon Musk and the Department of Government Efficiency. That will probably not be inflationary. That could be deflationary as well.
Well, what I found interesting in the reporting is some members of Congress, apparently in the Republican Party, are thinking about how to pull back from some of President-elect Trump's promises around taxes. Look, I think what happens with regulation, very uncertain, and as you say, it could be pro-growth or not. We'll see how far it goes. There's a reason why we have regulation to protect consumers, et cetera. The question of tariffs is a much more nuanced question than most people think. It depends very much on, how much is passed through, whether or not profit margins go down. Tariffs are, a one-time change in price levels. They may or may not be inflationary. But we've also seen a period in history when tariffs and retaliatory tariffs led to a recession and some people think a global depression. The final point to make is, an expectation of increased debt and deficit we all need to worry about. Chair Powell responded, I think, appropriately that at this stage, the debt looks like it's manageable, but the trajectory and increasing deficits, I think, has got to be something that's worrisome to everybody. So overall, Joe, I think it's a fraught time in terms of economic policy. It could go either way, and we'll have to wait and see exactly what the first moves are, and then what the second and third moves are when it comes to tariffs.
Hey, Roger, one piece of this, though, is the energy complex. And when I say energy complex, it's oil and gas on one end, LNG and the like. And then there's also, you're looking at some of these solar and wind companies, by the way, they're getting slammed from an equity perspective. And I don't know if I imagine there's going to have to be a lot of M&A in that space, just given how some of those companies could struggle if they don't have some of the benefits and tax benefits and the like. But on the oil and gas piece, we had a CEO of Exxon on, Darren Woods, last week. And there is this, there is a market, in terms of what they want the price of gas to be. They don't want the price of gas to go too low. It's very important, I would think, from an inflationary perspective, if the idea is that you need to offset the tariffs or the inflation effects of tariffs with lower gas prices, do you actually think they're going to be able to get those lower gas prices?
Look, as you know, the price of oil is a global price. It depends on lots of things. The U.S. has the advantage right now of being energy independent and less concerned about, uncertainties around supply in the rest of the world. So I think we have a little bit more chance of controlling the price of energy in this country because it's, at this stage, purely a domestic question and less driven by geopolitics. But you put your finger on another really important point, Andrew, which is so much just depends on, profit margins and whether or not businesses, if there are tariffs or if there is an increase in input cost, their ability to pass those along. And what we saw in the most recent bout of inflation is that for some things, those companies, consumer goods companies, had to unwind those efforts to pass along price increases. So there's quite a bit of cross current here. And there may be, as you point out, some movements in profit margins or in certain goods and commodities that will offset inflationary pressures in other places.